Thank you for joining me. I'm Alex, and I would like to talk to you about Walgreens Boots Alliance. And in case you're wondering why Boots Alliance, it's because they bought a company called Alliance Boots, and I know it still doesn't make sense, but that's as far as I'm going to explain it. So what they do is pharmacy and expensive merchandise, which means that they have a pharmacy business, which is reasonable, and they also sell other stuff for vastly inflated prices. So the thing is that they're open a lot of the time, so you will buy overpriced merchandise if there's no other store around, and that will subsidize things. Also, unlike other pharmacy store type things, they still sell cigarettes, so there's that. So price currently is almost $53 and market cap of $48 billion with a PE of just over 10. It's 10.37, which pretty reasonable, I would say. Dividend yield 3.46% is also pretty reasonable, with a payout ratio of 35%, which is, you guessed it, it's also pretty reasonable. So revenue $132 billion, which is up 10% from the previous year. To compare that, that's about half of what Amazon, and it's not half of what Amazon does. It's much closer to what Amazon does, but it's about a quarter of what Walmart does. Now, Walgreens has 9,600-ish stores, which is almost twice what Walmart has. So, per store, they sell about an eighth. It's not that much, but, they're not department stores. They just sell, like, consumables is what we would call it. Earnings $5 billion, which is up 20% from the previous year, which is also pretty reasonable. Total assets $68 billion. Total liabilities $41 billion, which leads to stockholders' equity of $26 billion, which is down 5%, which, again, shouldn't be happening when you have earnings of $5 billion, but, it happens. So, they're the second biggest pharmacy chain in the US after CVS, and the third being Walmart. So obviously Walmart is trying to get market share there, while Walgreens is trying to get Walmart share there, market share. What? And CVS is trying to hold on to the top spot, and there's much competition. Shockingly not in price, because insurance companies and stuff kind of dictate the prices on medication, which is weird. But there's subtle things you can do to increase profits, and one of them is to decrease the amount of time that a pharmacist has to spend on a prescription, and there's a lot of things to get into here. But obviously, earnings of $5 billion on $132 billion of revenue is not too bad. And I don't really see a whole lot of risk factors, although there's one major one. So I think overall you have a pretty safe stock that you will see if it's being disrupted years in the future. So very safe stock. You will have warning signs well in advance. Don't really see how anyone could quickly disrupt a chain with that many stores with loyal customers, because if you tend to go to one pharmacy, you tend to stay with that one pharmacy, because transferring prescriptions is way too difficult. Very few risk factors except for Amazon, which just bought PillPack, and Amazon wanting to get into the space is always a bad thing. Now, PillPack is very small, and they do things vastly different, which is not necessarily better. So PillPack sends individually wrapped things where you get your pills that you take. Like, say you take 3 different prescriptions every day in the morning, then you get one single serve of those 3 pills, and whatever else you take in the afternoon, and everything is kind of complicated. But that is not a big business, but the problem is that Amazon wanting to get into the space could spell trouble. But again, not necessarily in the short term. So, to sum that all up, very safe stock, decent dividend, decent payout ratio, decent balance sheet, decent PE, not necessarily big growth stock, so growth investors are out. Everyone else, I think that's a good stock to invest in especially for diversification, and especially if you want to have a safe stock as a base. If you want to get into more speculative things, on the other hand, so diversification, very complicated if you want to do it right, but decent stock to buy for a growth for a dividend investor, decent stock to buy for a value investor, and not a good stock to buy for a growth investor. And everything pretty safe, pretty good growth, pretty reasonable. That's it for me for today. If you like this video and you haven't already, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.